And then the same telltale since, when I was introduced, I don't know if it was introduced in 2016 or when, but, what is the purpose of the mortgage stress test?
The purpose of the mortgage stress test is we want to make sure that you can qualify for a higher mortgage payment than what you're actually paying. Because if you get, let's say, a rate of 4.5% now, that rate is locked in for whatever term it is. Let's say for the 5-year term, you're good. It's a fixed payment, you're good for that 5 years. We know that you can make that. If at the end of that 5-year term, when your mortgage comes up for renewal, rates are at 8%, that your payment is going to be much higher than what your current payment is. So that stress test stresses your file so that we can make sure that when your mortgage comes up for renewal and your mortgage payment is going to be much higher, you can qualify to make that payment and you don't have to sell your home when it comes up for renewal because you no longer qualify to make that payment.
I mean, that makes sense. I mean, we've been seeing that a lot here, like this past year, where people that locked in 5 years ago for 1.5, 1.8, 2.2, 3%, are now having to relock in at 5, 5.5, 6, and their mortgage payments are way higher. And they're like, well, what am I going to do here? So that makes sense. So it's almost a buffer, like safety zone.
Well, and it's needed because, like you said, we are seeing a lot of that right now. They're renewing and their lender is offering them a renewal rate, but it's easy to just sign on the dotted line. So the lender will offer them a higher rate than what is available. So that kind of takes away the option to shop around for a lower rate, because if you can't qualify for that higher payment, then you're stuck with what that lender is offering you.
Very good to know. Yeah, makes sense. I know we see this a lot, especially in Grand Prairie, car payments, high vehicle payments, payments and stuff. So let's say I went and bought a new truck and I have a $1,000 monthly payment on my vehicle. How would that affect my pre-approval?
So if your truck payment is $1,000 a month, that's $1,000 a month that could go towards your mortgage payment.
Okay. And then what about my mortgage amount? Does it affect how much I get pre-approved for at all?
Yeah. So let me just run a number here.
Because I mean, I've read some things where they, like, for easy numbers, they say, every $500 a month in a debt or a monthly payment reduces your mortgageability by $100,000. I don't know if that's true or not. So
yeah, so I know with where rates were at a year ago, it was for every $100 that you had in debt payment, for every $300 car payment that you had, it took away $100,000 in mortgage amount that you could qualify for. But
really?
that would have changed with rates.
Are you going to do a quick calc on this?
Yeah, I'll do a quick calculation.
That's crazy. So at the lower rates last year, if you had $900 in car payments, it reduced your mortgageability by $300,000.
Yeah.
That's crazy. Huh. Yeah, that's nuts. Now, what if they buy a house and then they want to finance a new vehicle? Do vehicle lenders look at the debt of a mortgage the same way as mortgage lenders look at the debt of a car?
No, everybody can qualify for a vehicle payment.
Okay.
So always buy the house first and then buy the vehicle.
Interesting. Yeah, I'd be curious to see what at current interest rates, what a payment looks like for reducing mortgageability. That's way higher than I thought. Because I mean, even without a debt payment of any sort, I mean, if you're like a first-time home buyer between the ages of like 20 and 30, I mean, usually your income isn't high enough to, be able to mortgage more than like a $400,000 home to begin with. So then you go and you finance a vehicle. I mean, you're basically hooped when it comes to trying to get pre-approved for a house.
Yeah. Oh, for sure.
That's crazy. I guess the car dealerships aren't advertising that either, hey?
I think they just don't understand the impact that it has. They don't see the mortgage side of it, so they're not aware of the impact that it has.
A referral system going with my buddies at the car dealerships, being like, hey, if you guys have people coming in that don't own a house yet trying to buy vehicles, refer them to me. I'll give you a kickback and then we'll refer them back to you after they buy the house.
Yeah, tell them to go buy the house first.
Yeah, interesting. That's funny. Yeah, that's crazy. I mean, even like new vehicles now, like you can't even buy a new vehicle for less than probably $700 a month in a payment. So right there, even if right out the gate, you're reducing your mortgage bill by $200,000 with any new
Mhm.
vehicle in the market. But most people are probably spending around that 50 to 70,000 mark, which is probably closer to that $1,000 mark a month. Nuts.
So for every $400 a month that you have in vehicle payments, it drops your purchase price by 250,000.
Really? Because of the
This is where
increased
rates are
interest
as
rates?
of right now. Yeah,
Oh my goodness.
because
So like,
with the higher interest rates, the stress test is higher, so the payment that we have to qualify you with is much higher. So yeah, 250,000 for every 400 that you have in credit card or vehicle payments.
that blows my mind. Literally, I mean, anyone that has $1,000 payment is going to essentially be hooped from buying a house unless they have extremely high income. But if you're, like I said, like a first-time home buyer, a younger person, you are essentially handcuffing yourself from buying a house if you purchase a vehicle. And the problem with the vehicles too is they're a depreciating asset. They're not like a house where you're going to sell that in 5-10 years and get your money back or likely make money on it because of appreciation. So
Right.
what a
Well, and the
horrible
interest rate
financial.
on that. The interest rate on that, and some of those loans are at what, 6-7 years? So you're kind of stuck with that payment for 6-7 years.
And
So
they're
if you
high
go,
interest rates too.
yeah.
They're not
So
0% anymore, 2 or 4%. Like they're like 8.99, like 12.99.
yeah, so buy the house first. Buy the house,
Interesting.
then go get the vehicle.
Okay.